Financial Survival Network, helping you to survive and thrive in the new economy. Get our complimentary newsletter at financialsurvivalnetwork.com. This is the Financial Survival Network.
This show is brought to you by Audible. They are the leading provider of spoken audio information and entertainment. You know I'm a huge Audible fan because you can listen to audiobooks whenever and wherever you want. Whether you're at the beach, the gym, or stuck in traffic, there's nothing quite like Audible. Go to audiblepodcast.com/Lutz and sign up today. You are listening to the Financial Survival Network.com. I'm Kerry Lutz on 1230 WBZT. With everything that's going on in the world today, crises, war clouds on the horizon, it always pays to have a historical context so you can maybe get a glimpse of what's really happening. That's why we go to Bob Hoye, who has a historical grasp of events second to none. Bob, welcome back to the Financial Survival Network.
Yeah, Kerry, good to be with you, and thanks for the kind comment.
Yeah, well...
Yeah, history indeed.
Putting it into a historical context, what do you see happening now where we're at?
Well, on the more immediate part, in the first part of July, there was a sudden discovery of soaring rates in China and plunging currencies and soaring rates in Indonesia and also India, as bubbles over, and all of a sudden, the central bank starts to lose its reserves and things like that. And at the time, it reminded me of July 1st of 1997, when you had the discovery of bank reserves leaving Thailand, hot money going out, and the central bank running out of reserves, and the Thai baht heading down. That was their currency, and their short rates heading up. But immediately the authorities said that this is a small and isolated event. And then I think a few weeks later it hit the Philippines. This is just memory. And then they said, well, it's just isolated to there, and then it hit Indonesia, and then they said it's just isolated. So that took the summer. And the U.S. corporate bond market was having pretty good time. And then when it hit in September in New York, you had I recall at the time it was you had the worst month in the corporate bond market in a decade. So it really hit the market. So just last night I took a look at it, and the stock market got a setback, but you just call it a quick hit. And then, of course, you were in that great financial mania, the tech bubble that blew out in March of 2000. So what we're looking at here now is that this... I've tried to find an authority saying that the problem in Indonesia or China was isolated, but I couldn't find one. And it's been creeping across the world. And here we are in September, which... if you've been in a party financial market, which we have been, September can be vulnerable, and if you get a sell-off going, it'll likely continue well into October. So the markets are very vulnerable. You've had, and again, we're going to stay on the credit markets on this one. You've had a runaway market in lower grade bonds, fueled by two things. One, the zero interest rate level, which is a depression level of zero for the U.S. Treasury bill. And so it's forced people to go out the risk land and buy terrible bonds. And then that was exaggerated by the policy of the Federal Reserve to be buying about some $85 billion of bonds each month, some of which were subprime mortgage bonds, and their intent, I believe, was to lower interest rates. And we've found that in the past, when you have a runaway market in lower grade bonds going into April, you watch out for the reversal in May. There's a very strong seasonal tide there. And that's what did happen. So your subprime bonds, whether it was municipals, junk, or high yield, or even emerging market bond prices, well, they really got hit hard in May, June. We called it a mini panic. So that became extremely oversold, and you had a very good rally out of that to about a month ago. And then on some of these issues, the ETFs, the prices are now breaking down. So this is really not good, because if you take a look at the stock market, and too many analysts out there look strictly at the stock market, if they're technical analysts. If they're fundamental people in the stock market, they kind of get the trend and look at the wonderful earnings, because although it's been the weakest recovery since the 1930s, you have had earnings going on and stuff like that. Mm-hmm. So that provides a sort of isolated view. And all of history shows you that you get the problem showing up first in the credit markets. So we are geared for possibly heavy liquidation of definitely lower grade bonds, and that'll pull down the general stock markets. I just noticed that the Jakarta Indonesian stock market has come down to new lows here recently. So it took 3 months to take out a year's bull market, and it's close. The next down tick for that one is kind of a game over, toast move, and that can't be isolated from other equity markets. The other one is that this week, all of a sudden, copper sold off, and then today, except for crude oil, most every commodity, lumber was up, but most every commodity was showing red, and this is not good. So this adds to my concerns that there may not be many bids for anything in a week from now. Now, here's where we can get into the precious metals. And gold, I think, will be okay, and in the sense that, yes, it could get hit, because in financial distress, the tendency is that the U.S. dollar goes up. But you have, in times of financial distress, the really careful money heads to the most liquid items, and that is the U.S. Treasury bill, and it is gold. So the interest in buying the U.S. Treasury bill steadies or firms up the dollar, and then, of course, the interest in buying and positioning gold, just for its liquidity's sake, there'll be a bid there, anyways. But unfortunately, you can't say the same thing about silver, because in going into a credit crisis, silver and the gold together, the gold silver ratio acts like a credit spread. So the silver in a financial contraction heads down relative to gold, and so our advice until recently was to lighten up on the gold and silvers, and for very nimble traders to trade the short side of the silver market, and that has been working so far. So then we want to step back away from whether one wants to own gold or own silver or be short silver or whatever, and just say, what is the ratio telling us? And, well, it's actually, we can go back one more step, Kerry, is that in the rally for precious metals out of the disaster in April, May, silver will always rally faster than gold. So then what we do is keep track of the momentum on the silver-gold ratio and using what's called an RSI. And whenever it gets above 78, it means that the play in precious metals is getting pretty speculative. So a few weeks ago it got to 80. And at that point we said this is now in dangerous territory, and you're not sure whether it's going to go up another point or two in the next few days. But at any rate, we pointed out it was dangerous, and then that was the time to lighten up on the play. So then now going the other way, and back in the bad times in April, that RSI on the silver-gold ratio got down to 22, which was exceptionally low. So that was time to begin repositioning. And just to conclude this part on momentum in silver and gold, is that in September a year ago, when there was a terrific rally going on for the precious metals sector, the RSI and the silver-gold ratio got up to 84, and at that time we explained that this were very dangerous stuff. And then if you go back to 2011, which was really the big peak for the whole of the precious metals sector, that RSI got up to 92, if I recall rightly.
Right.
And the only time that it had been that high was at the end of the big bubble for silver and gold in January 1980. So then we noted that one was dangerous. So on this current, let's call it a sell signal, I think one could say an intermediate decline. I don't think new lows. And also, if we're going into a fall period of heavy liquidation, it could conclude by late October, early December. So, yep, we would be very light, little exposure to anything, because general stocks could go down and commodities down. Lower grade bonds are going to be a disaster, because I think that was one of the greatest bubbles for low grade bonds in history. And then also the gold sector may not be able to withstand it too well. So it looks kind of bleak, but then we might just well take a look at what recent developments through the summer are telling us. And one is the problems coming at us from Asia, and then the other is the weakening commodities, includes that. And then as of today, you had this sudden sharp rally in the U.S. dollar. So that's then a warning that we could be going into a credit crisis. I think the reason why the dollar goes up in a credit crisis is that when you get asset prices falling, the Fed is unable to get its portion of credit expansion out the window. At the end of the day, the Fed really needs speculators to bid asset prices up, so they will then borrow money, and happily from the Fed. But when you get asset prices falling, that doesn't work. So then the Fed is stymied in its attempt to depreciate the dollar. Mm-hmm. Then on the dollar index, overall, during the bubble periods with all of the huge and massive issuance of credit, a good portion of it was contracted in New York. So that debt, whether it was in Egypt or Turkey or wherever, is due and payable in U.S. dollars in New York. So that the size of the debt written is actually sort of a short position on the dollar. And as I say, the dollar up today is a, let's call it a signal.
Lots of fun coming up ahead, and want to talk more about that and what's going on here in Syria, how that's going to affect us. Up next on the Financial Survival Network with Bob Hoye on 1230 WBZT. I know we've got a lot of you out there who are coffee fiends just like me. You couldn't go one day without your Java. But here's my question. Why do you drink so much marginal coffee? You know, that watery stuff you get in some places? There's another life, friends, where coffee is good, right, and true. Our friends at Tonks buy your beans directly from the growers, roast it to absolute perfection, and ship it to you within 24 hours. It's a bi-weekly subscription which sends the best beans on earth directly to your doorstep for the price of just a few cafe visits. They'd love to send you a free sample so you can see what you've been missing out on. Use the URL tonks.org/liberty. That's tonx.org/liberty. They'll send you a free sample, and I'll tell you, once you've tasted their coffee, there's no going back. Thank you so much to Audible. We love Audible. I'll tell you a great story. It kind of saved a cross-country trip with my daughter and I. I was driving her out to Denver. She graduated from college. I told her, Britt, I'm not going to pay for you to party in New York. You have to find a job, and if you want to go to grad school later, we'll talk about it. But in the meantime, you got to get a job, and you have to do something. You're not getting paid to be in New York to party. So she got all huffy, and then she did some research, and she said, Denver, third best place in the country for recently graduated college students, new college grads. And she tells me she's going to move out. At first I was a little upset. It's your kid leaving the nest. You feel a little uptight about it, but I knew she made a good decision. She had thought it out. It was rational. So we're driving out there, and how it is with your kids. They're much smarter than you. They're quicker. They have so much more life experience, and they just know everything. And this led to some spats. So finally, after about 3 or 4 hours of driving, we weren't talking to each other anymore. So put on my iPhone, and I had downloaded the book, The Social Network, which is the story of Facebook about Mark Zuckerberg. And the movie was based on it. And we started listening to it, and she said, wow, I never listened to an audio book before. This is wonderful. I love it. And we started talking about the book, and we played it for about 8 or 9 hours of the trip, and it helped us patch things up. We totally got along well after the book, and it was just a wonderful experience. And the thing about audiobooks, yes, your imagination when you read, nothing can be better than that, let's face it. But when you're listening to an audiobook, you're getting a story told to you. It's a different experience than reading. Maybe it's not for everybody, but I think everybody should try it. So go to audiblepodcast.com/Lutz, audiblepodcast.com/LUTZ. Sign up for a free 30-day trial, and you will get a free audiobook, and I highly recommend it. You got nothing to lose. It's totally enjoyable. It's one of those things every day or several times a week I look forward to playing, listening to, and you stay up on the latest books. The newest books are almost all published in audio format the day they're released. So if you're into Michael Connelly, David Baldacci, and a lot of others, Grisham, all those books wind up there. And the Grisham books are really have an incredible narrator. The latest guy, he's amazing. I think you'll enjoy it. So audiblepodcast.com/Lutz. It's been another Triple Lutz Report. Kerry Lutz signing off. And we're back on the financialsurvivalnetwork.com, 1230 WBZT. We're with Bob Hoye, the master historian of financial markets. So, Bob, we got a real mess on our hands here. You're seeing the outlines of it, basically, and the dollar is going to spike, isn't it?
Yeah, it's and perhaps we might look at the dollar as a safe haven, again.
Relative safe haven, right?
If you're dealing with big and careful money, you have to go to the most liquid items. And as we mentioned, that's gold, and it's also the U.S. Treasury bill is the senior currency. And I believe it's happening. I think this is also one of the main reasons why you have Treasury bill rates down to zero. It's not so much Fed policy. It's a massive amount of parking of money in scary times.
Yeah, where else do you put it, right? I mean, if you've got $10 billion you need to park for safety, you're going to park it in a bank in Europe, or are you going to park it at the too-big-to-fail National Bank on the corner of Broad and Wall, right? Where do you park it?
Yes.
Right?
So that's one issue. But, for decades I've been saying that there's only one force on this planet that can defeat the U.S. military in the field, and that's been the Democratic Party.
They're doing an
and when
admirable
headed
job.
up by an airhead like Obama, it's a disaster. Now, any responsible president would have moved a couple of years ago when the problem in Syria became obvious and that the government there was not going to retire, and it turned nasty. And I think then a surgical, as they say, move to take out his Air Force, which the American Air Force can do, could have done, should have done. And now you've got Obama and his lines in the sand, which was idiotic to say at the time, because you don't want to foreshadow your own options. You just go bang. When the guys get really nasty, you hit them. So, and then you've now got the whole of the left in a fascinating position whereby generally they're anti-war and generally for dictators.
Yeah.
And now it's needed to be, you now have the humanity side of it with chemical warfare.
Now, who knows who did those chemicals anyway? It's not
well,
really
I think
convincing.
as the weeks go by, I think the story will be that Assad has a large military position, and also probably the story that the weapons of mass destruction in Iraq disappeared into Syria.
You mean the ones that didn't exist?
The ones that didn't exist. I'm beginning to accept that story that they were moved,
Yeah, they
and now they've
definitely
been
were.
used.
They absolutely were, but the left, it suited their story at the time to say that they didn't exist and that it was a figment of Bush's administration to undermine his policy. So now they're in Syria, and nobody wants to admit that they exist. That they existed. Because
Well, when it was first discovered to have been used, it was a tragedy. And my thought was, now which side did it? But that was a week and a bit ago. So, but I think more recently, you have to think about who can deliver a weapon like that, and who could have stored it, who could have kept it, who could have used it. So, but then you look at it, Kerry, and say, why the hell did they go to that extreme? Now, for some reason or other, the Assad administration can kill its own citizens with bombs and RPGs and bullets and everything else. But then when you go to chemical warfare, that gets to be much more dreadful in the eyes of certain people. So the left is in the quandary on this one, because it now knows it must act. But then also, see, 2 years ago, the Obama attitude and policy heading towards the election campaign was that terrorism was over.
Mm-hmm. Yeah.
So then they couldn't then go out and knock out Assad in early days, because all of this was over. So it's a rolling disaster, and it's made worse by a absolutely loopy administration.
Oh,
I
yeah.
mean, these guys are
They're amateurs.
will eventually be seen that you cannot develop international policy for a country as powerful as the United States using Chicago politics and Chicago methods. I mean, it's the whole thing is absurd.
Yeah.
And one wishes that it would go away as soon as possible.
Yep.
But it's going to take some time. So, again, this type of international disturbance is not good for financial markets either.
Mm-hmm.
So, who knows? Maybe the Israelis go in and do the deed, but
At least they're competent.
yes. In the meantime, this is the risk-reward ratios for any investment are really not good. How much money is to be made in gold and silver? You had a huge run-up in lower-grade bond prices to important momentum and sentiment figures. That peaked out in April. You had the same thing with the utility stock index, which is finance-related, and it soared up to an upside exhaustion as one of our technical measures. And you can't retrieve that. Once you've done that kind of excesses, it goes bad. So then you've also, and the inflation bulls have difficulty with this one, is that you've had this long bear market in base metals. They surged up to a big high in 08, as did crude oil. And that was a cyclical high, followed by the worst recession since the 1930s. And by the way, the feature of any post-bubble contraction is the severe recessions and weak recoveries.
Right.
And although the recovery is now at 4 years, which is getting long in tooth, and also the bull market is 4 years, which is long in tooth, it's the economy side has been weak, and the stock market side has been strong. And again, sectors reached speculative and sentiment excesses in the stock market. So everything got overpriced. Everything. And then it starts to head down, and we're also at the season where liquidity disappears. You know the old sell in May, go away,
Right.
go away. The other half of that is oversold markets in October. You know, Kerry, historically, the fall has seen crashes. If you're going to have a crash, it'll happen in the fall. You had the South Sea bubble in 1720. It had its peak in June of that year, dithered around in the summer, crashed in the fall, worst of selling in late October, then sort of a test of the market in November, and then it was all over. Then there was another bubble, 1772, and same thing, blew out in May, June. Then 1825 was another, that was a really huge bubble, and on that one, the blowout was in May and June, and then the crash was in the fall, but that crash didn't clear until January. It was so bad.
Wow.
Then 1873 was another big financial mania around the world,
Oh,
and
sure. Yeah.
then this one, you had a pretty good stock market in the U.S., and where Europe and England did its high in May, June, the U.S. had that final little rally in September of 1873, and then you went into the crash. Then 1929, similar. You had the best for England and Europe in May, June of that year, and then the U.S., you managed to get the final tag-in rally into September, and then poof, down it goes. So and then if you look back in history, that takes us back to 1720 for fall disasters. And the one that I found was excited about was in northern Italy, when it was the financial center of the world in the 1300s. there was a good market for mortgages and all kinds of vehicles until about 1346, and then it went into a few years of disaster. But the major urgencies and the big liquidation problems were always in the fall. So there you are, Kerry. If you're going to have a disaster, it'll likely happen in the fall.
It just seems to make sense, especially in our modern society where too many of the big players are away for the summer to have one. It's got to wait till they get back from their vacations in the Hamptons, out in the south of France.
This is what we were looking for. A couple of weeks ago, we said that the market would probably enjoy some sunshine in the first week in September, which we have had.
Absolutely.
And now it's beginning to get a little precarious.
Yeah.
But what we also pointed out is that after Labor Day, you wanted to make sure you weren't too heavily invested in anything, and you're not to wear the white shoes after Labor Day.
Hey, and that's on that note. We got to go. But hey, so briefly, gold and silver go down a little bit in this next disaster. And
gold down a little bit, silver down quite a bit relative to gold, and you can always get in touch with us at institutionaladvisors.com, or actually, if you just Google my name, Bob Hoye, everything seems to happen. I'm always amazed at the internet.
Hey, you and me both. You Google me, Kerry Lutz, or Financial Survival Network, and it just pours out there.
Yeah.
We're always putting new things up like you guys. So just go there, check out Bob Hoye's work. It's well worth your time and your effort, because the old Mark Twain saying, history doesn't repeat, but it certainly rhymes, and it's rhyming quite loudly at this point. I think you're right, though. There's some crisis brewing here. The China interest rates going sky high says, and it's amazing, Bob. They were like 2 years ago, the BRICS were just berating the United States and all the developed countries. You don't know what you're doing. You don't know how to run an economy. You guys are idiots. And all of that, of course, is true. No one can take issue with that. But they don't know what they're doing any better than we do. That should be the takeaway here, right?
Indeed.
Yeah.
Yep.
I mean,
one always in our business requires a skeptical eye.
Yeah. Until we go back to some currency that's backed by something, nothing is going to work. It's really that simple, right?
And then I've got a quote somewhere in my files from about 1833. A financial guy in his writing in his journal, and sort of advice to himself and anybody else was that you have to look to credit markets and to politics in order to survive.
Yeah.
So this is where on our second part here, we've covered the politics.
Yeah.
And unfortunately, the politics is going to include some military operations.
Yeah, just out of stupidity, just out of pure stupidity. And, you go back to the classical gold standard. It's the only thing that worked in a somewhat complicated world fairly well until they started messing around with it. And then the whole thing collapsed, and we've been just from one crisis to the next, to the next, to the next, and nothing has worked for a protracted period of time.
But even when Great Britain was on the gold standard for about 150 years, you still had big stock market booms, credit market booms, and crashes. So the best part of the gold standard is that it limits the ability of an experiment in unlimited government to acquire unlimited financing.
Yeah, well...
So this is why the intellectuals hate gold. I mean...
well, you can only have one bubble at a time, Bob, right? You can't have multiple. You can't have currency bubbles, treasury bubbles, and real estate bubbles blowing at the same time. You can only have one. And that's about all we can really deal with. You can't have these multiple bubbles.
But I think eventually the U.S. and other countries will go back to a gold standard, and it won't be a decision amongst the governing classes. It'll be forced upon them by the average guy.
Yeah, because we just can't take this anymore. I mean,
that's the only way you can close the door on their ambition.
Yeah, we just can't put up with it anymore.
And then, like in the U.S., with the Civil War, off of gold.
Mm-hmm.
And then I think it was the Grant administration about 1875, and this was the bubble that blew out in 1873, so they were looking at signs of trouble. And then responsibility just came back in, and they said, enough of this greenback stuff.
Yeah.
And all it took was a letter to the Treasury Board, or whatever it was they call it in those days, that at a certain date, I think it was 1878 or 1879, that the New York and New Orleans were, maybe Philadelphia, were gold points, and that they would buy and sell U.S. dollars against gold. So you could take in your gold and get U.S. dollars, or you could take your U.S. dollars in and get gold. So going into that specific date, the street was worried that, there wasn't enough gold in the Treasury. But then once you realize that the full faith and credit of the U.S. is back again behind the gold currency, then there's no point walking around with gold coins. So, so there was more demand for currency than there was for gold. So, and that can be done again.
Yeah, and same with the Coolidge after World War I, more or less. Yeah, it occurred, but there were flaws with the exchange.
Oh yeah, that was
standard.
the gold exchange standard.
That was a mess, and but we don't need to get into that anyway. Bob, it's always a pleasure, and always enjoy speaking with you. Thanks so much.
Good to be with you.
All right, be well.
There we go. Okay, thanks, Kerry.
Hi, it's Kerry Lutz. I recently decided to move my retirement account into physical precious metals to hedge against the coming times. If you want to move an existing retirement account into physical precious metals that you can hold in your hand, tax-free, there's no company that can do it more quickly and efficiently than Regal Assets. It took them just 24 hours to open my new IRA account, and all I had to do was fill out one simple form. The best part is that Regal Assets does all the work for you. They cover the setup and administrative costs for 2013. If you're interested in making the same move I did, call 855-678-6620, 855-678-6620. That's 855-678-6620, or visit them at regalassets.com. You'll be glad you did, and tell them Kerry sent you.
The Financial Survival Network, helping you to survive and thrive in the new economy. Get our complimentary newsletter at financialsurvivalnetwork.com. This is the Financial Survival Network.